Today, I will load up the Tesla chart on the Passive Nomads Option Simulator, a free simulator for everyone to use. Every wheel strategy video explains the best case scenario, but in reality, markets have pullbacks. This video will show you what actually happens when trading a wheel strategy during the COVID-era crash and how you keep the engine running in bad times. A wheel strategy is applied when I want to buy the stock, but I want it at a lower price, so I will sell put contracts and get paid the premium. Until the day comes, I get assigned the stock at that price I wanted. I will have plenty of capital set aside so I can ladder my position into my stock position. So that means I will wait until either the first put gets assigned before I deploy the next chunk of capital. You will see why. Here I am applying my first part of the strategy, selling a put at a level I would want to buy it at. I will do this over and over until the day I get my first leg of stock. By making the plan to buy several legs of 100 shares, I don't rush into anything and welcome a crash if it should present itself. I bank the first put. I'm pocketing about $700 each time on 30 to 50 DTE contracts. Eventually, I get assigned. I take my 100 shares of stock, and now I turn to the next part of the wheel strategy, selling the calls. I will continue to do this until I don't have enough premium from rolling the strikeout when in the money, and I decide to let the stock get called away. So far, this is wheel strategy 101. Here the stock rallies all the way up to my call strike. If the stock ever got called away on this expiration, I would make the spread on the stock up to the call strike. Plus, I would pocket the premium I sold the call for. Or if it was worth me rolling the call, basically that is swapping it for a further away contract that has lots of time and value when the current contract has hardly any premium and time remaining in it before expiring. IVX, overall at the money IV, has spiked as you can see here. And with IV like this, I always will capitalize on rolling it to pocket juicy premiums. Price has started to drop below my stock entry level. IV still highish and my new call value being crushed here. I will take advantage of this while I can still roll it for a strike above my stock entry that has juicy premium. If price starts to drop further away, this will start to get tricky to keep to the wheel strategy textbook play. Best I act now just in case. Also with very high IV and stock price drop, I will sell a new put leg, activating a new wheel strategy to acquire more stock. I am wanting to ladder into this stock, so I will get paid again to wait for my next purchase. Now I am managing two strategies during the month, although it is not a lot of work. More time goes by, and here we see IV crush on the contracts I sold. I will take up the put leg and wait to see how the remainder of the month plays out. I roll the call, collecting rent each month on this wheel, very textbook so far, though the spread varies on market conditions, and premium available on the calls. No need to put another put leg on, I don't want more stock up here, not yet anyways. I use some experience with chart analysis to determine the price level I want to add to my stock positions. Back to basics, I keep rolling my call and collecting rent. Now price drops, volatility remains in the market, so time to switch the next put leg on again. This is where things start getting real. My call leg is worthless, so I decide to roll to make income of this first stock investment, but it's not worth rolling unless I lower the call strike though. I have to keep it tight with underlying entry level and even go inverted slightly, below the stock entry. High IV is assisting with prices at least. Meanwhile, the put leg is textbook at the moment. Price is below the put at expiration. I would be wise to roll it. But for the purpose of this, let's try get in real danger and take the underlying on board. Now we have two wheel strategies fully running. At least I lowered my stock entry level, which assists with the future call strike ability to capture premium on the rolls. I have 200 shares covered by two call contracts just sitting above them. The market continues to plummet, and this is not what the YouTubers said would happen. I have one more leg of stock I want to buy to make this market correction advantageous to me. But first, the call legs. IV is very high again, but now the price has dropped so much it is making it hard to make some money selling them. So I go further out in time to a contract expiring well over a month to capture some rent. But I decide to treat this now as a stock laddering. With no advantage at this point in time to sell call contracts, I may as well wait for a bounce and capitalize of the ability to sell a very juicy put. I will place my third put leg to get assigned if price should ever get there at its expiration. I'm still making money, just not on everything. You have to be flexible in a time of chaos. Finally, the market rallies. I cash in the put and now I can sell calls back around the stock entry level, which is easing on my nervous system rather than having the strikes for the call contracts heavily inverted with my stock entry level. While there is still some elevated IV in the market, I go sell a put contract back down on the lower level. I want the last portion of my allocated money to purchase stock at. Yes, the wheel strategy's wheels fell off, but I'm accumulating stock during a bear market, and most months I've been able to make rent of the stock, and the key right now is the IV. You must always watch the IV level, because high IV not only gets the juicy premium in the pocket, but it also will eventually drop like a rock and cement the contract income. And it is back to playing the wheel strategy game again, collecting rent against my stock, over and over again. This was the historic replay of the COVID era on Tesla, fully replayed on the free-to-use PassiveNomads.com option simulator. You can also practice on SPY historic price chart and zero DTE option trading on SPX. Everyone is welcome. Experience IV and Greeks dynamically changing as time moves forward. Get more confident with the strategies you're working on.